Okay, well, here's another video of top 5 things in trading. My previous video was about the biggest mistakes traders make, and this video is about the top 5 things pro traders do and you don't, so not yet. So pay attention and get to know what the big players and the big boys are doing in this market to copy that, of course, and to get on that same level. The first one, trade the higher time frames. I can stress it enough. I tried it all. I'm not saying that I'm one of the pros, but I tried it all. The scalping, the day trading, the 5-minute charts. Of course, there is some direction to be found in when you're looking at the lower time frames. And yes, there are a lot of people who are successful as scalpers or as day traders or whatever it is. But to get in for a long-term trading strategy and to be in this thing for the long term, you really need to know what's going on the higher time frames to start with. Is the overall market on the weekly chart, for example, in an uptrend, in a downtrend, where you have to find out until where it's gonna pull back, or where support areas are. The support and resistance areas on the bigger time frames are way more important than, for example, the 5-minute chart support and resistance levels. They get broken often. Your stop loss gets hit without a reason, and of course, the bigger time frames, when you get in on a trade at a support level that actually means something on the weekly chart, those are the golden trades. If you get a signal around that area, that price in fact does turn around, the market does turn around. The weekly chart, it will give you a run for months, and it's just one single trade, with the potential to run for months and give you a huge risk reward, like 1 to 10 or whatever it is. Those areas are the ones you want to be looking at. So trade the higher time frame. Make sure you know what's going on, and if you're in it for the big money, make sure you catch those waves, you catch those trends on those time frames. The second one, always calculate risk reward. I wrote it in my book. The third part is all about risk management. So if you want my book, please leave a comment or send me a message or whatever. It's free for all of those who are willing to trade with one of my preferred brokers. But it's not about that today. It's all about this top 5. Always calculate risk reward. Why? Because you can be a technical analysis master, but if your risk reward is off, you will not make money in the long term. So what do I mean by that? Risk reward is like, have you identified a trade that has the potential to give you at least a 1 to 2 risk reward? So if you're willing to lose, let's say, $50, is this trade, does it have the potential, the room to the upside or the downside, depending on what side you're taking the trade, to make you at least 100, or preferably 150 or whatever, 1 to 3 or 1 to 10 if you trade the bigger time frames. Amazing. But you have to calculate your risk reward. If you enter a trade, make sure that the area where you have to place your stop is an area that actually makes sense. So not on a 5-minute chart, for example, but try to identify the key areas on the charts, and that's most of the time on the bigger time frames. But if price breaks that level, then your hypothesis or your idea about the trade is wrong. It's not a problem. It's all about expectancy, and it's all about ideas, or that nothing is certain in trading. So if that's the case, make sure you are out with a small loss, like 2% or something like that, and make sure that by taking the trade, you also know that there is a potential in that trade to make you at least twice the amount you are willing to lose. And that can only be 2%. We all know that, I hope, by now. But make sure, like the professionals, always calculate your risk reward. Do not jump into a trade without a plan. They handle their emotions. Yes, for sure. I discussed it in the trading mistakes, and I'll discuss it in the things the pros do, the top 5 things the pros do, and that's this. They handle their emotions. That's the thing that you need to make sure that if you're willing to add to a position because it feels good, and greed tells you, oh my God, I'm gonna make this, I'm gonna add to the position, now I'm gonna make this. If you start adding, your risk reward falls apart. You violate your system. You gotta handle your emotions to get in this, to make it in the long run. 4. Trade with a well set up plan. Okay, well, here's the thing. If you don't have a plan, you probably don't have a clue what risk reward is. You don't have a clue on what you're looking for actually in the market. Um, I gotta get the question a lot of times, like, what do you trade, or what should I buy, or what do you think about this stock, or you know you can't blame people for asking that, because when you think about investing, is like, who's gonna give me the golden idea to become rich overnight? That's in some way, that's still in a lot of people's minds. But trade with a well set up plan. You gotta know what time frames am I trading? What are key support and resistance areas I actually think that have meaning? Like I said in the beginning, if you trade the bigger time frames, then your trading career probably will start by analyzing a lot of markets, and the chance that you can jump into a trade right away is very small, because you have to know where price is going before you jump the trade in the trade. So trade with a well set up plan. Know what time frame. Know what your risk reward is. Know how big your account size is. So therefore how much risk you can take on the trade. Know your emotions. I think that should be in the trading plan as well. Make sure in the trading plan you have something like, how do I evaluate my trading plan? Because if you start to do things, um, you have to try to objectively look at your trading plan, like, is this working, or isn't it? If it's working, then the trading plan is like, has a few adjustments, and needs maybe a few adjustments, but keep executing that same plan, because when it doesn't work, I don't know if you remember, but one of the most common mistakes retail traders, new traders make is like, I got this Ichimoku system, I'm gonna jump it, and this is what it is. I have this super indicator because someone sold it to me for a couple of $100, so it has to work. No, it doesn't, but that's something for another debate, another video maybe. But if there is a plan, if there is a strategy, trade with it, fine tune it, make it your system to run this thing in the long run. So, and talking about running, let's get into the last and final one, and that's, they know trading is a marathon. Trading, people, is a marathon. It's not a get rich quick scheme or anything like that. They know trading is a marathon. Pro traders know this. They know that if they take on a trade and it goes in their direction, and they thought it was gonna make them 4 times as much as their loss, they were willing to take, and after 2 or 3 weeks it comes back because maybe some news event or something happened, and they get out break even. You know, it's not a good thing. You can blame people for not being happy with that. On the other side, it's, you protected your money, you took on a trade, you did a proper analysis, your risk reward was okay. You know, that's what it was. 3 weeks. Forget the time. It's get into the next one. Probably you found a couple of new ones that are still running. Maybe that same news event pushed something up to a 1 to 5 risk reward. The other way around is also possible. Um, Weeks, days, months. It's just time that people make up, but it's nothing like the market will give you something in time or whatever. It just moves, and you execute your plan, and then in the long run, you are making bigger winners. And I hope for you, you make more winners, that all combined with more and higher percentages of profits. You will be building your account, you will be protecting your money, and you will make sure that all those things will add up to a great income, or a great investment or something like that. But it is something that needs to be done in the long run. And something very interesting I want to add to this is, I think the fifth one in the top 5 of most failures is, do not give up. Things will go the way they go. You will have like 1, 2, 3, 4, 5, 6, 7 losses in a row if you have a bad day, or you have a bad week, or you have a bad, you know, streak of losers. Too bad. Check your system. Was it in place? Is everything working the way it should be working? If it is, then keep going. Those losses were small, but there are still some trades on in there with bigger potential, and new trades will come with big potentials as well. It is something to be doing in the long run. So that's why the metaphor of the marathon is in place in this one. I hope this one helps as well. Make sure you check out the top fives, because you don't no need to reinvent the wheel and draft new blueprints. There is a lot of information out there. Go get it and be successful. See you in the next video.